I'm Corbett Wall with DV Auction, here with the cattle market summary for the week ending May the 3rd, brought to you in part by Cargill Fescue EMT. Tall Fescue, a dream to grow, but for cattle it can be a nightmare. Fescue EMT is a new mineral defense with end-of-fight management technology, research proven, and backed by the expertise of Cargill Animal Nutrition. It's uniquely designed to help defend cattle against the challenges of grazing end-of-fight infected fescue while improving growth and overall performance. Make sure your cattle are prepared for the threat. Learn more at fescueemt.com. May is beef month, but it's been pretty unkind so far. We're not just barely a week into it, and we've had the worst week in the markets that we've had in quite some time. Actually, it's your last 2 weeks, which have been equally disastrous in your cattle market. For the guys that own yearlings out there, you look out there, and each one of them is worth about $120 a head less than they were 2 weeks ago, and the fat cattle are about that much too. But about $15 has probably been lost in your cash and on the board in your feeder cattle market, maybe a little bit more than that on cash. And on your fats, we've lost a good $8 in some spots. You think your market started out at 123, it started the calendar year out there, and we scraped and clawed and had the worst winter in recent memory, and just lots of death loss, tons of weight loss, just really a struggle to feed cattle this winter, and we thought that we would reap some rewards in the market, but in that 123 started the calendar year out, gained about $5 or $6, and then have taken that much back and more just in the last 10 days, 2 weeks. But it's just really been a rough time, and we haven't seen much positive press out there. One thing that could be a positive is RCAF, one of your big producer groups, has joined in with about 4 of their member cattle feeders, and they are suing, got a class action antitrust suit against your big 4 packers. Now, I'm not saying that's a great thing, but it could prove that there has been some collusion with these packers using unfair trade practices to try to keep the market depressed. And you think, well, some of these right-wing groups, they are always thinking that the corporates are out to get everybody. Well, maybe, but the attorneys that they have, these antitrust attorneys that they have that are handling this class action suit, have a very good reputation. They know what they're doing. They wouldn't have come out and done this deal if they didn't think that they had enough bullets to prove it. So, and we've already seen another consumer group get involved, and it could end up being a big deal. And if nothing else, it might cause some of the way that these packers trade for cattle, and the way that they've pretty much gotten rid of all this negotiated trade and whatever you want to call it, the lamification of the cattle market, or the chickenified of the cattle market, or it's just the way of the hogs. It's the way everything's going. But it takes a lot of country to run a cow. And I think the cowboys are going to fight back a little bit harder than your sheep industry, your chicken industry, and your hog industry did, to try to keep a little bit of independence in it, and we sure hope so. But at the same time, we've got this fake meat deal that's really pushing hard, and I know you guys, I talked about it one of our recent visits, and I know you guys are pretty well up to speed on this, but it's really getting to be a big deal. This Beyond Meat company had their initial public offering in New York Stock Exchange, or NASDAQ, and they offered those shares up at $25 initially, and they gained 163% value, closing at $65.75 there on the first day of public offering. That was on Thursday, and took that company all the way to a value of $3.9 billion. They're going to be using that to push this product down people's throats and try to fool people into thinking that it's healthier for you and all these things. And they've now got that company valued at 44 times their sales, which most meat or food companies are closer to around 2 times their value compared to sales. And that company lost $30 million last year, and all these people piling in on it. And it's just like some of these techie deals that caused a lot of the big failures in the stock market there several years ago. They're just betting on blue sky that's not really there. And Beyond Meat or Beyond Burgers are not even your fake meat customers' favorite product. It probably is the Impossible Foods product, the Impossible Burger that we now see in Burger King and in some of your other places. And they actually like it. That Beyond Meat is also a plant-based product. It's the one that's made mostly out of yellow peas and bleeds red beet juice. But the Impossible Burger is a similar type product, but actually people seem to prefer that, and it is really getting to be popular out there. But I think people are finally starting to recognize this, and hopefully they're starting to fight back a little bit about it. Humans have been eating beef since the caveman days, and we've been getting along pretty good on it. And I'm not sure. A lot of people think that this product was healthier. Look at all the ingredients that go into some of these fake meat burgers. Whether you call it a veggie burger or some kind of a name that makes you think it has some meat in it, but it doesn't. But look at all those ingredients there. And I know there's got to be growth promotants in it, and they're really pushing to get that product out. The Impossible Meat Company has also had a shortage now. They're trying to open it up and spread it to 7,000 Burger Kings all across the country, and they just don't have enough product right now. So they're on back order on this product. They're adding another shift, trying to add another line. They make that stuff in California. And I tell you what, but people for some reason think that it's more healthy. You look at this, it's been out on social media. I'm sure most of you have seen it, but the comparison with that Impossible Whopper versus a normal beef burger, they have more. The Impossible Whopper, the plant-based product, the fake meat, has more than twice the calories, more than twice the fat, more than twice saturated fat, and more than twice the sodium as a regular beef burger, yet less than half the protein that you get in a beef burger. And so, I don't know, the people that are kind of trendy, these techie people, the new generation coming on, they think they're saving the world by doing that. I don't know if they think that this is going to become India and cattle are just going to, sleep on the porch and just kind of take over, and your ranches and the people that raise cattle, or they're not going to be able to use that for cattle production anymore. No. And as much as I've heard some taste tests where some of the people that don't really know what they're eating and they don't care about their health, evidently, they seem to like this fake meat burger, and they think that it tastes close enough to a real genuine beef burger that they want to try it, and they're into saving the world, and they think that it's a great deal because there won't be near as many cows farting out there if we're not eating that many hamburgers. But the real money comes in when you're talking about middle meats, and I will bet you that these fake meat companies really going to have to go back to the drawing board to try to replicate the consistency and the flavor of a ribeye steak or even roast beef or something like that. And I think they've got a lot of work to do, but they're going to put a dent in it. And when you get a lot of positive press like this IPO offering that jumped through hoops like that, who knows? They may start putting a bigger dent into the market for ground beef anyway. But let's go on and talk about the market for the week. Your futures market on live cattle Well, probably the biggest thing is we lost April, of course. Well, we moved into May. We lost our April live cattle contract. So now our spot market went out to June. Well, it was trading at such a discount to what our April was that it was seemed easy for the market to just crash. And all this stuff just happened all at the same time. But June live cattle on Monday was up 22 cents only. But then Tuesday down $1.02, Wednesday down 37, Thursday down 20, Friday down a quarter, and your June live cattle contracts ended at 113.42 at the end of the week. That was down $1.63 for the week. Your August is all the way under 110. We knew that was kind of a hurdle or a barrier, maybe that was going to hold the market. Well, we dropped through that. August ended the week at 109.15. We may have trouble holding this fat cattle market over $1. But May feeder cattle, Monday was down 55 cents, Tuesday down $1.80, Wednesday down 22, Thursday down $2.40, Friday down $1.82, ending the week with May feeder cattle at 137.15, down $6.80 for the week, and $14.37 for the last 2 weeks. It's just amazing you've lost that much. August sitting all the way down there at 146.37. Down 6.48 for the week, and nearly 15 bucks lower than the most recent highs we had. And these are going to be on those green yearling feeder cattle that are coming off grass, off those pastures, the best feeding cattle of the whole year, and got the market depressed that much on them. I got a little news for you. The demand for those cattle coming off those grass pastures in the middle and late summer is going to be so good, and in the auction markets and whenever they land there, and you'll start seeing some of those guys with the green yearlings just taking them to the sale. They're not going to like that country bid. People take cattle to the sale more so when the market's really good or really bad, because they're just there's no telling what they might could get for cattle when it's really good, and they don't like the bids they're getting in the country when it's really bad. When those cattle start showing up at the auction, the feedlots are there. They want those cattle, best feeding cattle of the whole year, and it's going to make the cash market go up on those. And that board does have to tie in close to what your cash indexes are. So I'm not that worried about that. Maybe your green yearlings coming off grass aren't going to bring 170 in August or late July, but I don't think it's going to be where the market's at now either, and I don't think it's going to get a whole lot less. But been wrong more so probably than I've ever been right in my lifetime. Let's talk about your fat cattle market through Thursday. Big volume, 125,400 head. That's not counting a little more cleanup sales on Friday. Going to be the biggest volume we've had so far this year. And just kind of show you where your market went. They started trading on Tuesday in the Southern Plains at $3 lower at 123 from the 126 they had the previous week. That 123 was the bulk of the trade, but it eventually dwindled down to $121, and that's kind of where you would be if you had to guess what your Southern Plains live fat cattle market was. In the Northern Plains, they started at 124 on Wednesday. They didn't have much choice after the Southern Plains had traded on Tuesday at 123. It kind of started at 124, which was also $3 lower for the most part, and it dwindled on down to about $1.22. But your 5-area feeding region through Thursday on live steers was 123.70. That was more than $3 lower than the previous week. Your dress trade in the Northern Plains kind of started out at $2, and that was in the middle of the week there too, after the market was depressed, and it eventually got down as low on bulk sales at 196. But your 5-area feeding region weighted average dress steer on through Thursday was 198.96. That's almost $6 lower dress than just the previous week. And I tell you what, it's just the equity in these investments is just falling out so fast you cannot keep up with it. That's why everybody has to hedge. That's why we can't keep a decent market on our futures market, because we've just got so much down pressure on it. And when you get speculators wanting to jump in, they know they can jump in pushing it down and make it go a whole lot faster than we can holding any kind of market position at all. But your box beef cutout values for the week, quite a bit lower. So your packers are still making huge margins, but they are losing a little bit of value as we start to go on. But they held it longer as we moved through the early spring than we thought. But choice cuts still up there at $230.27. That was down $3.22 from the bulk of the trade the week before. And your average trade for the week on selects, $216.36. That's down $4.31. So choice select spread on your average on your bulk trade there was $13.91, and about an average movement of 653 loads. Let's talk about your feeder cattle market. Your real-time index on Cattle Market Central ended the week at 140.16. That was down $3.75 compared to the end of the previous week, and down more than $6.50 in the last 2 weeks. That's huge, and that's a 7-day moving average, guys, and all through the middle 12-state region. But all classes of feeder and stocker cattle and calves in your major auction markets across the nation, $4 to $8 lower. Now, the full decline was on the cattle that are usually the most desired, your steer cattle, but they had the most inflated values there. And we talk about how we see that dissension between the steers and the heifers widen whenever they really want them. But whenever the market's down, a lot of times they come back together. Your least decline was seen on heifers. That goes to show people still want cattle. They're just a lot more conscious of the price, and they're kind of buying letting price dictate what they do. So they want to cheapen up with some heifers, but they still want cattle. We just don't know what's going on with this deal. It's hard to understand how we're just losing everything whenever just a couple of months ago, with all the flooding and the weight loss and the death loss, we thought we were going to be in a big shortage, and we thought that maybe we could hold this market a whole lot better as we go into this summer that we know kind of has heavy supplies of market-ready cattle. But you just you can't count on anything anymore. You can't even count on the fastest horse winning the Kentucky Derby anymore. Everything's just messed up, and there's just different views coming from every side. But let's talk about some individual quotes we saw late in the week last week. Santa Teresa, New Mexico, down there on the border. These are Mexican cattle coming north. 53 head of 482-pound steers bring 171.25, and that's a pretty good price for those cattle up there. And they won't bring much more than that, even when you get right up next to the feedlots and the grass. But look at a yearling feeder market, Crawford, Nebraska. 70 head of 767-pound steers bring $145.50, and these are the top prices I'm getting you. And the best prices we seen late in the week was in Bloomington, Wisconsin on Friday. They sold 4 loads of 800-pound steers there on Friday morning at $155.50. Now that's a look at your markets for the week from a home DV auction office here in Canyon, Texas. We'll talk to you next week.